Hey guys, welcome back to Explore. Today we'll talk about what's behind the recent meteoric rise in meme stocks. Let's head into it. Stock risings. Meme stocks like AMC Entertainment Holdings, nice AMC, BlackBerry, nice BB, Tilray, NASDAQ TLRY, Clover Health, NASDAQ Clove, and GameStop, NASDAQ GME, have risen between 23% and nearly 300% in the last 5 days. It is obvious that there is a coordinated effort to boost these stocks. Throughout the week, they've been moving virtually in lockup with one another. The 10.3 million traders on the Wall Street Bets (WSB) subreddit are to blame for the increase. Members of WSB have devised a very complex trading technique as a means to their aim, driven by a financial independence, retire early, FIRE philosophy. It all starts with meme stocks. Small enterprises trying to turn their businesses around in the face of unprecedented short interest. It's the kind of business that appeals to the underdog. How is it possible for average investors to go from zero to hero with this setup? Also, make sure to write your thoughts in the comment section. A squeeze on two fronts. It's time for the squeeze. With a chosen meme stock and a well-coordinated community ready to go, massive purchasing activity on near term, out of the money, OTM, options kicks things off. When Tilray was trading below $14 last month, for example, there was a lot of open interest on the $20 June calls. This is due to the fact that most members of the subreddit have minimal bankrolls. OTM options are a great financial instrument for members since they are inexpensive, provide a lot of leverage, and have a huge theoretical return, although with a very low possibility of achieving it. If 100 Tilray $20 June calls, dominating 10,000 shares, were purchased in May, they would cost as little as $20.10. Those options, on the other hand, would win $10,000 for every $1 Tilray stock that trades above $20 at expiration. These OTM options aren't just purchased by Reddit traders. Short sellers must protect themselves against the possibility of an unlimited theoretical loss. Profits from the option can offset short losses by a 1-to-1 basis beyond the strike of expiry, allowing one to cap losses at a given level. The phenomenon leads OTM options to trade far over their fair value, as determined by mathematical models like Black-Scholes, market makers, M&Ms, are more than willing to move the transaction in the opposite direction. M&Ms can arbitrage the overpriced time premium on OTM options by selling OTM call options at an inflated price, then buying a deep in the money put at the same strike, and then delta hedging by buying stock. Hundreds of thousands of WSB ardents and doom and gloom hedges by comparable OTM options on the same stock at the same time, causing issues. To stay up with demand, the MMs must now sell more options, purchasing more puts to hedge, and, more critically, buy more of the underlying stock to hedge. Returning to the precedes example, hedging the OTM option would be simple, requiring only the purchase of 12 shares of stock per contract. When a swarm of hungry traders demands hundreds of thousands of contracts from MMs, however, there is likely to be a lot of buying activity. Short sellers are frequently concerned about any abnormal growth in the underlying stock, therefore a spike in stock price catches their attention. Nothing comes up in frantic searches for new information on potential business enhancements. Shorts then make the mistake of assuming that someone with non-public material knowledge is purchasing and start covering their holdings. As shorts cover their positions, the stock rises, and MMs find themselves needing to acquire exponentially more stock to protect their position. It may only require 12 shares to hedge an OTM call, but it will take about 50 shares to hedge an ATM call, and 100 shares to hedge a DITM call. The whole situation is akin to a nuclear reactor that has gone off the rails. As the stock rises in value, members in the community who did not participate in the betting experience, FOMO, fear of missing out, this creates panic purchasing of OTM options, which causes MMs to buy more of the underlying stock, which encourages more short sellers to cover their positions, driving up the price even more and causing even more FOMO for OTM options. It quickly devolves into a gigantic feedback loop, selling a DITM put, purchasing an OTM call, and shortening the stock to lock in a huge OITM put premium does not compensate for this type of behavior. This is because borrowing shares during a squeeze, or even in general, is highly difficult depending on the stock. Furthermore, other traders, not just MMs, may opt to sell DITM puts, thereby creating liquidity, as a synthetic way to go long-term equities with more margin requirements without paying full price. The aftermath. As the stock price climbs quickly, the firm begins to notice and publishes press releases encouraging speculation. This rises the meme value of shares and boosts WSB's new member growth, which also giving the community more chips to play with. As a result, stock prices have risen dramatically in a short period of time, allowing many people to ascend from rags to riches at the expense of hedge funds betting against the business. Some meme stocks, looking at you AMC, are currently excessively expensive. Early investors should take profits and consolidate their winnings. Any unfavorable news coverage or business missteps at these levels could lead the stock to plummet. Consider the undervalued meme stock instead if you genuinely like what they have to offer. What do you think about these meme stocks? Are you invested in them? Let us know in the comments section. This brings us to the end of our video. I hope you have enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so don't miss out on any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video. Bye guys.